Good morning, traders, and welcome to your market briefing for April 29th. And today's update will cover key developments across the US dollar index, WTI crude oil, spot gold, and Australian dollar. Starting with the US dollar index, the dollar weakened as markets opened this week, pressured by ongoing skepticisms surrounding US trade policy. Although US officials hinted at active negotiations with Asian partners, Beijing firmly denied any ongoing talks, reinforcing uncertainty around the tariffs dispute. Investors are now positioning cautiously ahead of several critical US economic releases, including the first quarter GDP, the PCE inflation measure, and April's jobs report. Softer data could fuel expectations of an early rate cut by Fed, adding downward pressure on the dollar. And from a technical standpoint, the dollar index remains fragile. The daily RSI hovers around 38.5, signaling weak momentum, while the MACD continues to flash a sell signal. Despite a strong ADX reading of 54.53, suggesting a defined trend, both short and long-term moving average points towards a bearish bias. Immediate support lies near 98.5, while resistance remains around the psychological 100 mark. Moving to WTI crude oil, oil prices experienced a modest rebound after Monday's steep sell-off, where the prices dropped over 2% due to the concerns about global growth and rising supply levels. OPEC recently agreed to raise production, while US shale output remains near record highs, and additional supplies from Iran and Russia have added pressure on Asian inventories, deepening the oversupply problem. Even though recent tariff concessions and easing trade tensions offered some relief, the core risk to oil demand still persists. And technically, a WTI has returned to the center line of its upward daily channel, testing resistance around 64.2 to 64.55. And however, with the RSI still below 50 at around 46, the upside momentum appears limited. Unless a clear break above key resistance occurs, the risk of another pullback remains on the table. Turning to spot gold. Gold prices reversed early losses yesterday, climbing back near 33.53 per ounce, driven by bargain hunting and lingering political and financial uncertainties. Despite some optimism from US officials on trade negotiations, China's denial of ongoing discussions keeps safe haven demand elevated. And on the technical front, gold remains well supported above the 3293.6 Fibonacci level. However, any breaks below this key support could expose gold to a broader correction towards 3200. Conversely, upside attempts face resistance between 3350 and 3368, and areas that will be crucial in determining if gold can retest the psychological 3400 level in the near term. Lastly, a quick look at the Australian dollar. Australian dollar benefit from the weaker US dollar and speculation that the trade tensions may be easing after China exempted certain US goods from high tariffs. And nevertheless, mixed signals from Chinese officials and continued global economic uncertainties kept the optimism. And domestically, expectations of an RBA rate cut in May also weighed on sentiment. And technically, Australian dollar shows a bullish setup with the RSI above 60 and prices holding firmly above the 14-day moving average. Resistance is observed near recent highs around 0.644 and the 200-day moving average as 0.6462. Support sits near 0.634 region, and a sustained break below this level could shift the current bullish narrative. Overall, the markets are trading cautiously ahead of major US economic data this week, while technical setups across key assets hint at fragile trends that could quickly reverse depending on incoming headlines and data prints. So that's all for this morning's update. Stay tuned and trade carefully.